So one important deduction under section 36 that we kept pending is bad debts. So deduction for bad debts, this is one clause, one deduction which many students exactly don't understand. They just casually read. Even in exam also, normally a basic level adjustments only they will ask related to this provision. At the time, whatever student plainly read, whatever he understood at plain, by plain reading, whatever he understood, he just, apply that particular logic, the answer will be correct. But examiner can twist, relating to this particular bad debt like anything, where 90% of the students who do not understand exactly this particular deduction will definitely do wrong. Especially MCQs, there is a possibility of twisted question on this. Anyhow, let's break that logic clearly by this particular session. Since this is one of the difficult deduction, a provision which is very difficult to understand, getting it basically and generally speaking. Okay, so what I'm doing is this, I will upload it on YouTube also. So 5th September, you will find this video on the YouTube, getting it. So you can watch this video in repeat mode. Okay, in the application we upload in the income tax course of CA Intro, where you have a limited view, but on the YouTube you can watch any number of times, right? Fine. So deduction for bad debts, section 36 subsection 1 clause 7. And if you observe this point, I wrote this particular thing, here you observe this particular deduction is available. This particular deduction is applicable only for the SSC following accrual method of accounting or accrual method of calculating income under the head PGBP. Yes. So, this point is not given in the section also. You don't find this particular logic in the section also. This particular concept of bad debt comes into picture. I am talking from accounting angle. I'll come to tax angle later. I'm talking from accounting angle. The concept of bad debt in the books of accounts, I'm talking, okay, it will come only when the SSC is following accrual method of accounting. So let us understand why that logic is, why so and so accrual method only bad debt situation comes in the books of accounts. See, in normally generally business means what? In business, I sell goods on credit, getting it. Tomorrow the customer will pay, or day after tomorrow, or after a month, or 60 days or 70 days he'll pay me. I sold goods, I gave the delivery of the goods, the customer received the delivery and he left the premises, all that. After 60 days when I try to recover, customer is not paying me. Finally, I end up with loss. Whatever sale value, let us assume 10 lakh rupee, I am not able to recover. That is called bad debt. As simple as such. Where I am selling goods on credit, customer has to pay me after a certain period of time. That money he is not paying me. Finally, one day, after a very big fight, it is concluded that the customer will not pay at all. That amount becomes bad debt. Bad debt may be full bad debt or partial bad debt. Maybe like I sold for 10 lakhs, customer only paid 5 lakhs. 5 lakhs is bad debt in such a case. So that is essentially the concept of bad debt. Now, see, how we record this particular bad debt in the books of accounts is the question. How we record this particular bad debt in the books of accounts, that is the question. So let us understand from the accounting perspective. Suppose, we have two methods of accounting, right? One is cash method of accounting. Another one is accrual method of accounting. What is cash method of accounting? Only when I sell the goods, on cash basis, only when I receive the money actually, correct? Only when I receive the money, I will recognize it as income. Expenditure also, if I just incur the money, I will not recognize. Only if I actually pay the money, then only it will be recognized as an expenditure. This is what cash method of accounting. In a cash method of accounting, obligation, transaction, occurring date, that and all irrelevant. You sold goods. You may be selling it on credit or on cash basis. Doesn't matter. You received money, then show it as sale. You incurred some expenditure. You have an obligation, you have a liability. You will record it only if it is actually paid. This is the logic, correct? This is the logic behind the cash method of accounting. Only when we receive, we recognize. Only when we pay, we show it as expenditure. This is what cash method of accounting. Now tell me, in a cash method of accounting, suppose to a particular customer, I sold goods on credit. I sold goods on credit. How much I sold is 10 lakhs worth of goods. I sold goods on credit. And I am following cash method of accounting. Understand? I'm following cash method of accounting. And I sold for 10 lakhs on credit basis for 60 days. Now tell me, this sale happened on 1st April 2022 or 2023, whatever. Now tell me, in my books of accounts, on which date I will record this as a sale? Will I record on the 1st April in my books of accounts? No, because I didn't receive money. I'm following cash method of accounting. Cash method of accounting means what? Cash account debtor to sales account. Only this entry I can pass. Getting it? Maybe I will have a cheaty. I will have some books with me where I will record on so and so date, goods sold to customer. So I need to receive after 60 days. Like that I'll record. Transaction I will record, but not in the accounting records. I will record it normally as a single entry system. Single entry. This is double entry. The single entry. So my books of accounts I maintain on double entry basis, but in a single entry record I'll just note down. So and so customer I need to receive so and so. After 60 days, the customer paid me 10 lakhs. Honestly, after credit period he paid me. So on which date he paid? 1st June only he paid. So on 1st June, I will record it as sale. On 1st June, I will record it as sale. Cash account debtor 10 lakhs to sales account. Within bracket narration. Amount received for sale of goods on 1st April after a credit period of 60 days. Like this, I will record the entry. Correct? Now tell me, when I am recording the entry, only when actually received. Only when I actually receive, I am recording the entry. If I do not receive, I will not record at all. Suppose I sold goods on credit. Afterwards, customer got absconded. I didn't receive the money at all. Tell me, will I record sale transaction in my books of accounts? In my books of accounts, will I record? No. Now tell me, when I don't record sale transaction itself, where is the question of bad debt? In the books of accounts, I'm talking. In reality, bad debt is there. I suffered loss. But in the books of accounts, how will I record bad debt? See, tell me, what is journal entry for the bad debt? Generally, how journal entry comes in our accrual system? Generally, whenever we sell goods on credit, we write like this. Customer account debtor 10 lakhs to sales account 10 lakhs. This is the entry. Now this customer is not paying me. So I credited to profit and loss account 10 lakhs. In the next year, this is current year. In the next year, I got to know customer will not pay me. Now tell me, this 10 lakhs will also appear in the balance sheet assets side. No, 10 lakhs receivable, trade receivable. But in the next year, I got to know that this 10 lakhs I will not receive. Tell me, bad debt I will have to write. What entry I will write? This 10 lakhs, customer whatever receivable, debit balance is there. This customer account I will credit. Debit what? P&L account. Actually, we will debit to bad debts. That bad debts account we will close and transfer it to P&L. So direct entry is what? Profit and loss account debtor to asset account, customer account. Customer accounts got closed. That loss is recognized in P&L. This entire process happens when you are following accrual method of accounting. In accrual method of accounting, only bad debts point will reflect in the books of accounts. Whereas in a cash method of accounting, the point of bad debt itself will not come in the books of accounts. Of course, you suffered loss, but it will not be reflected in the books of accounts. Why? What is the reason? What is the reason? Because we don't record sale also. We receive ultimately only what we received. We account ultimately what we received. Receipts and payments account like that. Correct? But in reality, you don't find cash method of accounting in reality generally. So that is the reason why the section was silent on to which method of accounting SSE's bad debts provision is applicable. The section is silent. Why? Because most of the SSEs follow which method? Accrual. So whether this particular point, what is it? Whether this particular point is clarified in the income tax or not doesn't matter. But we need to understand logic. Accrual method only when the SSE followed. Sale he will recognize. Sale he will recognize. Tell me, what is accrual? When I sell the goods, I will record it in my books of accounts. Tell me, under income tax, under PGBP head, on what basis we calculate income? How we calculate income? How we tax revenue, how we allow expenditure, deduction, accrual basis. Remember, we discussed section 145 in the initial class also. What method of accounting, what method of computation of income we should adopt while calculating profit or loss under the business or profession. What method you follow? You may follow accrual or cash. Whatever SSE regularly follows. Regularly, he is maintaining books of accounts. No, what method is following? Check out. He is following accrual. You also follow accrual in PGBP. That's it. Suppose in reality, books of accounts, SSE followed accrual method. Under income tax, in PGBP, can I calculate income on cash basis? No. Whatever, there is section 145 clearly says, the method of accounting that has to be followed for computation of profits and gains under section 28 shall be such method of accounting which the SSE regularly follows. This is the clear-cut section. So what SSE regularly follows for the books of accounts accrual, same method we should use under business or profession head of income for computing income. Now tell me, when accrual system I have to follow, whenever I sell goods on credit, that income is taxable in the year in which sale is happened. Sir, I did not receive the money. Doesn't matter because accrual system. Correct? Now tell me. So previous year 22-23, I sold goods on credit at 10 lakhs. I sold goods on credit at 10 lakhs. So this is my income under business revenue. Yes or no? Now these goods I purchased for 8 lakhs. These goods I purchased for 8 lakhs. So what is my profit? 2 lakhs is my profit. Getting it? On this I paid income tax also. I paid income tax on this profit in 22-23. Remember this 10 lakhs worth of goods I sold on credit. I have not received any amount till date. Even when I am paying tax on this 2 lakhs income, at that time also I didn't collect the money from the customer. Still I paid tax to the department. Sir, I sold goods for 10 lakhs. Sir, tomorrow I'll receive money. That's okay. But I sold goods for 10 lakhs. I purchased them for 8 lakhs. Sir, 2 lakhs is my profit. Take this is the tax, sir. Take it. I paid to the department honestly tax on that income. But remember, I didn't collect that income. Correct? Now, in 23-24 previous year or some other previous year after 22-23, it may be within the same year also. Who knows? Getting it? I got to know. What? I got to know that customer became insolvent, customer was absconded, customer became defaulter. Somehow I got to know that this 10 lakhs money I will not collect. I got to know that this 10 lakhs money I will not be collecting at all for sure. Now tell me, what is the treatment for this in the income tax? This is the question. This is what the provision is talking about. Very simple. Earlier in the last year, you sold goods on credit 10 lakhs, right? That time you showed it as income. Yes or no? In the books of accounts, you showed it as income. Even in the income tax records also, while filing IT return, you showed that income. And you paid tax also. But later what you got to know? Whatever 10 lakhs income I showed, I will not be receiving. I will not be receiving. Now tell me, the amount which I will not receive, the amount which is originally income, but later got to know that it's not income. The amount which is not income ultimately, but I showed in the previous year, earlier year, as income and paid tax on that. But later year, I got to know that this is no more an income to me. So earlier I paid tax on excess income, correct? So whatever turnover whatever sale value is there on that I consider in calculation of profit and loss, yes or no? So on 10 lakhs, I showed it as income earlier. On the profit, I paid tax ultimately. So 10 lakhs income I considered earlier. So tell me, if at all this 10 lakhs is not there, my loss would have been 8 lakhs, not profit. Correct? I purchased goods, it's a loss actually. Are you getting it? If at all in the same year I got bad debt, in the same year, 20-23 year, I sold goods for 10 lakhs. 8 lakhs purchased, 2 lakhs. In the same year, I got to know that it's a bad debt. Means again, I will reduce 10 lakhs, which means 8 lakhs I would have a loss if bad debt arises in the same year. Now tell me, bad debt is not arised in the same year, but in the subsequent year, subsequent or that next year, whatever. Now, what is the treatment? Very simple. Section 36 says, take deduction. Take deduction for bad debt. How much? Whatever amount you showed, whatever amount you taxed earlier. Getting it? Whatever amount you taxed earlier. If entire amount become bad debt, that entire amount deduction you will get. Suppose earlier I showed 10 lakhs income, but 10 lakhs not become bad. Only 5 lakhs become bad. Now in the subsequent year, how much deduction I'll get? Whatever actual bad debt is there, that much only. Whatever actual bad debt is there, that much only. You clear? Until now, are you clear? Now what the section says is, now you see the what section says, the points. The points are, first of all, bad debt must be related to the business that is carried on in the current year. In this year also we are carrying on that business. Getting it? Now we had a bad debt. This bad debt is related to a sale made in the current year or earlier years, doesn't matter. But I'm continuing that business. This is not a discontinued business. Getting the point? Now, and second condition, it is recognized as income earlier. Either in this year or earlier years, it is shown originally as income. Whatever bad debt I am showing in the current year, earlier I showed it as income. See, department, earlier I showed this income and I paid tax also. Now this became bad debt. Give me deduction. Department also will agree. Suppose no, I sold goods. I didn't show to the department at all as a sale. Subsequently, I couldn't recover that. There is a loss. Can I show loss? When I did not show income, can I show loss to the department on the same where earlier I got income? Since you showed income earlier, now if you got a loss on the same, okay, we will reduce it for you. That is the logical conclusion, correct? So that's what the section also says. So it is recognized as income earlier and it is actually written off in the books of accounts. What is it? One more condition. It is actually written off in the books of accounts. These three conditions, condition 1, condition 2, condition 3. So what 3 condition says? Bad debt must be related to the business that is continued in this year. It must be related to continued business. Of course, this bad debt is related to sale either in the current year sale or previous year's sale. Doesn't matter. But the business is still continuing. Second one, this particular bad debt, whatever you are showing, no amount, loss you are showing, no. This amount of loss, earlier you showed as income. To the income tax department under business or profession head of income, you showed as income earlier. Either this year or previous years you showed as income. Now you suffered a loss. Then only we will agree. That is second condition. What third condition? Show me books of accounts. Have you actually written off in the books of accounts also? Yes, sir. Yes, sir. She showed books of accounts. Sir, I followed accrual, sir. Earlier when I sold goods, customer account debtor to sales account, I wrote entry, sir. Now this year it became bad debt, sir. So customer account I closed and I transferred it to P&L account, sir. I actually written off in the books of accounts. Only if these 3 conditions are satisfied, you will get a bad debt deduction, which is a logical provision, correct? Which is a very, very logical provision. That's why that's why I started initially with the word accrual method. Are you getting the point? So this is the provision. Now, so let us look at one example. Suppose year 1, year 1, let us call it as, I sold goods for 10 lakhs. Now tell me, I will show this as income under PGBP, no? So income how much? 10 lakhs. And I pay tax on this. Purchases and all after reducing all that. But income is considered. Income is taxed. Year 2, this amount became bad. How much amount of this 10 lakhs became bad? Only 5 lakhs only became bad. So in the year 2, how much deduction we will get? In year 2 also some incomes will be there, some expenses will be there. In addition to that, earlier year income became bad debt now. Yes or no? So that 5 lakhs I will claim deduction. So bad debts will be allowed as deduction only if the amount the transaction related to which the amount became bad debt, the transaction is showed as income in the earlier years. Only then bad debt will be considered in the current year. So that's a very logical provision. Now, you see, there is another point. You see here, there is another point. What are they saying? Condition 3, condition 2, condition 1. I think these 3 conditions you understood right now. Condition 3, there is another alternate. Actually written off, sometimes it is not possible. Sometimes if it becomes irrecoverable, sometimes if the amount of debt become irrecoverable also you can claim. Sir, I didn't write off. In the books of accounts, I didn't write off. It became irrecoverable. That's enough. That proof is enough. If the amount become irrecoverable, that proof is enough. Now, this point is an impact. This point, the concept of irrecoverable, getting the condition that irrecoverable, that itself is enough to claim bad debts. Actual write-off in the books of accounts is not necessary. This point is an impact of ICDS standards. This point is an impact of ICDS standard. What is it? ICDS, Income Computation and Disclosure Standards issued under section 145. Getting it? 145 subsection 2. So that's the impact of this standard. Like, what is the brief story behind this? I'll tell you. This we will discuss at CA Final Direct Access more in depth. At CA Inter, we don't have ICDS, but one part of it discussed as part of the bad debts concept, which I am confident 90% of the students don't understand. They just plainly read, somehow mug up, and go and write the exams. If the same question tested in exam, little twisted, that's it, gone. Now, what is this ICDS, all that? What is this, all that? Now, tell me, what is the condition for claiming bad debts deduction? Condition number 1, it must be related to the business carried on during the year. That related business bad debt only considered. It must be shown as income earlier. 3, it must be written off in the books of accounts in the current year. Only in the year in which it is actually written off in the books of accounts, original books of accounts, not income tax records, books of accounts of the SSC. Only if it is actually written off in the income tax also, people consider it as a bad debt and give deduction under section 36. These are the conditions. Now, I hope, I assume that you have the knowledge of Accounting Standard 9. Accounting Standard 9, Revenue Recognition Standard. Accounting Standard 9, if you observe, there are 2 types of incomes. Revenue from operations, other income. What is it? Revenue from operations and other income. Now tell me, what is the recognition criteria? What is the recognition criteria for recognizing income under accounting standard? Very simple. In both the cases, what is the recognition criteria? First of all, sale or accrual of income should be there. Accrual of income shall be during the financial year. That is one condition. Plus certainty about collection. A revenue from sale of goods, revenue from rendering services, other interest income, dividend income, other income, nothing but. All of them must accrue during the financial year, and the person has a certainty regarding the collection. Only if these 2 conditions are satisfied, recognize the income in the profit and loss account. Yes or no? This is the condition which you learned. Yes or no? Now you look at ICDS. I'm not exactly sure about the standard number. ICDS 9 or 7 something. Revenue recognition 7, I think. I'm not sure exactly. So under ICDS also we have a standard called revenue recognition. When under income tax, revenue should be recognized in a particular previous year. So that is there is a standard on that. This also divides incomes into 2 types. Revenue from operations, nothing but revenue from sale of goods, revenue from rendering services, and other incomes. What is it? Other incomes. Getting it? Revenue from operations, what they wrote, exactly whatever is there in accounting standard, they copy pasted. The sale must have been completed. Risk and reward is transferred. Certainty about collection is there. Then tax that income on accrual basis. Then tax that income. Consider that income in the computation of income under the head business or profession. Consider that income in the ICDS, the business or profession, PGBP charging section. Consider that income. When completed, sale is completed, certainty about collection is there. Whereas for other incomes, income is accrued. Suppose I gave some loan to some customer. I am accruing income from the date when I gave the loan. Getting it? And it is not my main sale of goods or service. Some loans, my incidental business activity. Suppose, let us assume this example. I sold goods on credit to customer. 30 days credit period I gave. Within 30 days, if the customer repay, he can happily pay whatever the sale value is at that much. After 30 days, 2% per month interest will apply. 2% per month interest will apply. Now to one customer, I sold goods for him on credit for 1 crore. 30 days I gave time, he didn't pay. 31st day onwards, every day 2% per month. Per month 2% means 1 day means almost 0. Some 2% or 0.1% interest will apply. Correct? So per month, suppose 1 month is there. Customer, some 6 months over. After credit period is over. For this 6 months, customer has to pay me interest also. This is interest on sale of goods which are sold on credit. Getting the point? Now that interest income is there, no? I am not certain about the collection. What? Main sale value itself, customer did not pay. Interest, what about the penalty interest which I will collect because of the late payment? I am not having certainty. Revenue from goods, originally I sold these goods last year. I recognize it as income. I recognize it as income. Please, I'm telling you, watch this video once again. If at all you lost any link from the beginning, once again, clearly, slowly watch. You will understand very fantastically. Getting it? Now, I sold goods on credit earlier and I gave him credit period 30 days. And at the time when I made the sale, no, I'm sure. As on 31st March of the current previous year, relevant previous year, I'm sure, I'm certain about sale value. Getting the point? So I showed it as income under the income tax records and I paid tax. In the next year, when I'm looking at income tax, I got to know that customer is not paying after 30 days or after 60 days, whatever credit period. After credit period also, I am not collecting. As per our terms and conditions of contract of sale, after credit period, if at all customer did not pay the money within the credit period, after expiry of 60 days, after expiry of 90, whatever, customer has to pay every day some interest. Now, I am not certain about that interest income, whether I will collect in reality or not. What the ICDS income computation disclosure standard says, whether you are certain or not doesn't matter. Certainty point itself is not there. If you are accruing the income, recognize it. Consider that in income computation. You are not certain. Sir, I'm not certain, sir. Doesn't matter whether you are certain or not. Since it's another income as per ICDS. See, this is ICDS. It's a standard related provision. I'm talking about a standard provision, which is not there in CA inter syllabus. Getting it? But that point is indirectly covered in bad debt point. That's why I'm discussing. So certainty is not there. This income. So let us assume revenue from sale of goods is 1 crore. I recognized it, and I even certainty is there. I recorded in my normal books of accounts also 1 crore. I showed the same to the income tax department also 1 crore, and I considered that while calculating profit, paid tax also. Subsequent year, it became a bad debt. I recognized 1 crore in books, no, I wrote off subsequent year, and 1 crore amount I got deduction. Very good. What about the other income? Other income means what? In this example, interest on delayed payment of consideration from the customer. So that amount approximately came 10 lakhs. I accrued 10 lakhs, but I'm not certain. Tell me, will this 10 lakhs, since I am not certain about this 10 lakhs, I'm accruing 10 lakhs. Interest income, but I'm not certain. Tell me, in my routine books of accounts, as per accounting standard 9, will I show this as income? Why? Sir, we accrued 10 lakhs, no, interest as per terms of the sale, 10 lakhs interest he has to pay, no. I accrued, yes, I accrued, correct. But certainty is not there. I'm not certain. Original 1 crore itself, I don't know whether he'll pay. What about this 10 lakhs? I don't know. Getting it? When certainty is not there on a particular income, as per our accounting standard, generally accepted accounting principle, in books of accounts, this 10 lakhs income I will not show. This 10 lakhs income, what? I will not be showing. This 10 lakhs income is what? I will not be recording at all. Subsequently, I got to know that entire 1.1 crore original plus 10 lakhs interest got bad debt. Entire 1.1 crore got bad debt. 1 crore earlier I recorded in books of accounts. Sale of goods, certainty is there at the time of sale, I recorded. Subsequently, it became bad. Another 10 lakhs is their interest income. Since certainty is not there at the time of accrual itself, as per accounting standard, in my original books of accounts, I didn't record. Whereas, in the income tax computation, no, ICDS, no, in the PGBP computation, no, this other income 10 lakhs is there, no. If you accrue, that's enough, taxable. In income tax, this 10 lakhs is taxable if you accrue. The certainty is not there. In books of accounts itself, I didn't record, sir. Doesn't matter. For department, from department point of view, under income tax law, the 10 lakhs is taxable the moment it becomes accrued. See, I'm not giving you exact accurate provision. I'm just giving you an example how the provision was drafted in ICDS. So 10 lakhs is became accrued. No, I taxed it. Department taxed this 10 lakhs under PGBP as income from business or profession. Department taxed it. I paid tax also. In the year 3, finally we got to know that 1 crore original money, 10 lakhs interest income on which I paid tax under the income tax department, both became bad debt. Now, Can I claim 1.1 crore deduction under section 36 is the question. Now the provision has been started. I hope you understood the entire story. If not, once again watch this video 30 minutes once again carefully, then you will understand what I'm going to talk right from this moment onwards. So what about this 1.1 crore reduction under section 36? Can I claim 1.1 crore reduction? What are the conditions? It says business should be continued in the current year. Yes, it is continued. Income has been recognized earlier, 1.1 crore under the income tax law. Yes, 1.1 crore income is recognized. Third condition, it must be actually written off in the books of accounts. When I see the books of accounts, 1 crore I recognized because certainty is there at the time of sale and I recognized, and later it became bad debt. I wrote off. Actual write-off entry also is there in the books of accounts. So 1 crore I will claim deduction. What about remaining 10 lakhs? It is related to continuing business. Condition 1 satisfied. It has been recognized earlier in the income tax records while filing IT return. Yes, recognized. Is it actually written off in the books of accounts? Sorry. In the books of accounts, this 10 lakhs is not at all recorded. Why? This 10 lakhs is not at all recorded in the SSC's normal books of accounts, company's books of accounts. This 10 lakhs is not recorded at all. Why? Certainty is not there. When certainty about an income is not there at the time of accrual itself, that will not be recognized in the books of accounts at all. So that is what accounting standard 9 says. Company did rightly. They didn't recognize it in the books of accounts. So that 10 lakhs point itself is not there in the books. But in the income tax, what the income computation and disclosure standard says with respect to other income, if you accrue, that's enough. Certainty point they didn't cover. Certainty point they didn't highlight at all. They didn't put certainty point, which means as per income tax law, if you accrue income, you have to pay tax on that. Whether you are certain about collection or not, you have to pay tax on that. So under income tax, this 10 lakhs I considered earlier, year 2 or year 1, I paid tax on this 10 lakhs. By considering that income on accrual basis, I paid tax on that. Getting it? Now in the year 3, ultimately entirely became bad debt. 1 crore, I understood. It's actually written off and I claim a deduction also. What about 10 lakhs? In my actual books, I didn't record this 10 lakhs. Where is the question of write-off? Now what about that? In income tax, I paid tax on this 10 lakhs in the year 2. I paid tax. I considered this on accrual basis as per ICDS standard. I paid tax also. Third year, it became irrecoverable. Third year, it became bad debt. But you are saying write-off. Array, this 10 lakhs, I paid a tax under income tax, but in books, I didn't show it all. I didn't show it all in the books of accounts as income. Where is the question of write-off? Now tell me, SSC has a disadvantage because of the condition write-off. Correct? Huh? This was amended in the Finance Act 2015 and 16. This is a provision which is amended in Finance Act 2015. What it says, okay. Original provision is what? Bad debts can be claimed as deduction only when it is taxed earlier, only when it is related to continued business, only when it is actually written off in the books of accounts. Later, what they did, write-off condition they kept as it is. They added a proviso. To it. If at all, any income SSC did not recognize in books of accounts because of the accounting standard. However, the same is considered for income tax purpose as per ICDS standard. If that became bad debt, irrecoverable, then write-off condition will not apply. In books of accounts, it is not recognized, no. So, but in income tax, it is showed in the income tax records and paid tax. Finally, it became bad debt. Write-off condition is not applicable. If the amount on which I already paid tax under income tax record, but not recorded in the books of accounts, if that amount becomes irrecoverable, that's enough. Actual write-off is not necessary. What is it? Actual write-off is not necessary. Are you getting it? So, only for these types of other incomes, I'm telling you, for normal revenue from sale of goods, revenue from sale of services and all, what income tax standard says, what accounting standard says is matching. Whereas for other income, what income tax says is different from what accounting standard says. That's why this confusion and all. If at all you are being a CA interest student, if you understood until now, very happy. Otherwise, once again watch. If you watch once or twice this video, you will get a clarity what I'm talking exactly. Getting it? Watch at a standard speed or less than standard speed so that you understand very, very, properly. So, when bad debts is allowed as deduction, these can be deducted subject to the following. It must be a debt or a loan in respect of business which was carried on by the SSC during the relevant year. In the year in which you are claiming bad debt, in that year that business should be continued. The debt should have been taken into account in computing income of the SSC of the previous year in which debt is written off, or of earlier year. Either in the year in which I am going to write off, in that year I showed it as income, or earlier I showed it as income, and now I am writing it off. Getting it? Or it should be money lent by the SSC in ordinary course of business, like banks and NBFCs also, they lent money. And whatever loan they rented, they lent, no, that became bad debt, so they can write off to P&L, they can claim deduction. Now what? Write off in the books of account is essential condition for claim of bad debt. So what is the essential condition? Write off. This is another condition. So a deduction is allowed for the amount of bad debt or part thereof only if it is written off as irrecoverable in the accounts of the SSC of the previous year. In the relevant year, if you actually write off in the books of accounts, then only you can claim deduction. However, you see the note. Suppose if a debt means receivable item which has not been recognized in books of accounts, it's not recognized in books as per accounting standards, because books of accounts we prepare as per accounting standards, but it is considered, but it is taken into account in computation of income as per ICDS, and that amount became irrecoverable. It can be claimed as bad debt. It can be claimed as bad debt deduction under 36. Okay, it can be claimed as bad debt under deduction 36, and deemed that, assumed that the debt has written off in the books of accounts. It is assumed that, and it is assumed that debt has become written off or irrecoverable in the books of accounts by virtue of the proviso. Because some income tax standards, ICDS standards, require recognition of income at an earlier point of time. Getting it? Consequently, if that income becomes irrecoverable, it can be claimed as bad debts on account of the proviso. Actually, you can claim bad debts only when it is actually written off. Written off in books of accounts means in books it is recognized earlier. Then I wrote off. Then only I can claim deduction under income tax also. Whereas some incomes are there which are not at all recognized in books of accounts, but we are showing that income in the income tax records as per income tax standard. That amount became irrecoverable. What the proviso says is, okay, so and so income, you paid a tax on that by considering it on accrual basis as per income tax, but not in the books of accounts. You did not show in the books. Subsequently, this became bad debt. It became irrecoverable. But in books of accounts, you didn't write off this item because income itself is not recognized. So you did not write off. We assume that since that income is taxed earlier, now it become irrecoverable. Whether you write off in the books of accounts or not doesn't matter, because that point itself do not come into picture. You can claim deduction if it become irrecoverable. Now you might be having this doubt, sir. So much confusion even now. I watched it already 2-3 times this video, sir. Still I'm unable to understand. What should I do? Very simple. You are saying some amount is bad debt. Yes, sir. This year I had a loss, some amount. Some customer has to pay me the money. He did not pay me the money. Very simple. Is this money whatever you are saying bad debt, earlier year or this year itself, have you showed it as income under the income tax records? Check out. Yes, sir, we showed it, sir. Now it became irrecoverable, no? Now it became bad debt, no? Claim deduction. Sir, very simple. Entire this discussion also not relevant. Very simple logic. Sir, whether showed in the books of accounts, showed in the income tax records, that and all, ignore that discussion. Very simple. You are saying this year you have a bad debt. Some customer has to pay you money. He did not pay the money. That's it. No, he did not pay the money. No, is it a bad debt? Can I claim deduction? This is the question. Very simple. Now you are saying this amount is bad debt. No, is that amount earlier year or this year, whatever it is, Did I first showed it as income in the income tax records earlier or this year? First look at that. Sir, this amount, I already showed it as income in income tax records. Sir, now I am not able to recover. Then claim deduction. Sir, in the earlier year or this year, first of all, this income itself I did not show to the department. How come you show loss related to that? Income itself you didn't show. How come you show loss on that? Simple. This is bottom line. You clear. Next. So, if any amount of debt taken into account in computing the income of the SSE on the basis of ICDS, suppose if any amount is taxed based on income tax standard, it is allowed as deduction in the year in which that amount becomes irrecoverable. Generally, if it is recognized in books of accounts of the SSE, normal books of accounts of the SSE, no, only when it is actually wrote off in income tax also we can show that loss. But if at all an income is considered as per ICDS, if that become irrecoverable, then that is enough. Actual write-off is not necessary. For entire this, I simply summed up in 2 minutes, just a few minutes before, 2-3 minutes before I summed up. Simple logic that you follow blindly. That's enough. Now, so this point, let us keep it pending at this moment. I will cover in this video only. Recovery of bad debt. Okay, fine. So we spoke about first I sold goods, showed that income, paid a tax. Later I got bad debt, claimed deduction. Now I again recovered. Tax it. Simple. You recover some money, tax it. When you will tax it, only when that amount is actually written off and claimed deduction earlier. Simple logic. Simple logic. Year 1, I sold goods for 10 lakhs and I showed income in the income tax records, paid tax also. Year 2, this entire 10 lakhs became bad debt. Since earlier I showed income, no. Now I am not recovering it, no. It's a loss, no. Earlier, on income which I did not receive, I paid tax. Now it turned into loss. I can claim deduction. Year 3, somehow customer got, money again. He paid me 10 lakhs. Now tell me, first year I paid tax on 10 lakhs. Second year I adjusted with loss. Third year again I received, no. Now, ultimately, as a whole positive, how much? 10 lakhs. 10 lakhs is taxable. That's it. Recovery. This is what? Recovery of bad debt is taxable. Recovery of bad debt is taxable under section 41, subsection 4. Recovery of bad debt is taxable under section 41, subsection 4. Getting it? In the year in which it is received. In the year in which it is received. Provided condition is there. Earlier it is allowed as deduction. Earlier it is allowed as deduction. Earlier, so when do we claim bad debt deduction? Only when it is taxed earlier. First you should tax it, then only bad debt deduction. Only when bad debt deduction is there, subsequently if you recover some money, it is taxable. Correct? Simple logic. Very, very logical provision. No need to mug up. So that's what 41.4. If a deduction was allowed in respect of bad debt under section 36 earlier, subsequently some amount is recovered in respect of such bad debt. More than, so where allowance is made, no, the excess shall be deemed to be profits and gains of the business and chargeable as income in the previous year in which it is received, whether business is continued or not. There is a section 41. Under 41, it talks about various incomes. All these incomes are taxable whenever they were received. Whenever the benefit you got, whether business is there or not, doesn't matter. See, in order to claim bad debt deduction, business should be there. Bad debts you recovered, is it taxable? Whether business is there or not, doesn't matter, it is taxable. For recovery of bad debts, it is taxable whether business is there or not. So what are they saying? Very simple. Year 1, I sold goods on credit, paid tax on that. Year 2, some 6 lakhs became bad debt. 4 lakhs I received, 6 lakhs only became bad debt. So 6 lakhs I showed it as deduction. Year 3, getting it, 6 lakhs only bad debt. Customer told me 4 lakh he will pay me. He didn't pay me. Remember, he didn't pay me. He told me he will pay me 4 lakhs for sure. He became insolvent, finally agreed. He agreed for 4 lakhs payment. Even the liquidator also assured me that he will pay 4 lakhs. So on that assumption, I wrote 6 lakhs. I wrote off how much? 6 lakhs. Year 3, customer paid me 8 lakhs. What? Customer paid me how much? 8 lakhs he paid me. Now, first year, I paid tax on 10. Second year, I got to know that I will not recover 6 lakhs. Only 4 lakhs I will recover. So, I showed bad debt 6 lakhs. Getting it? As a whole, how much amount I paid tax year 1 and year 2 put together? First I showed 10 lakhs income, next I showed 6 lakh loss. So which means on 4 lakhs I already paid tax, effectively. Third year, ultimately how much I received? 8 only I received. Ultimately how much I received? 8. Out of this 8, already I paid tax on what? 4 lakhs. How much is taxable in this 8? Only 4 lakhs is taxable. The recovery amount is taxable. How much? Only 4 lakhs. Understand, there is a very, very clear logic. Year 1, sale value 10 lakhs, I paid tax. Year 2, I showed bad debt. Related to this amount, I showed bad debt 6 lakhs. 6 lakhs. Remember, whether did I receive balance 4 lakhs in that year? I didn't receive anything. I got to know that 6 lakhs I will not recover. So 6 lakhs I showed loss. 4 lakhs, which means effectively by these 2 years, on 4 lakhs you paid tax. First you paid tax on 10 lakh. Later you showed 6 lakhs loss, means effectively you showed profit as a whole. How much? 4 lakhs. Tax you paid. Year 3, customer paid you ultimately final settlement 8 lakhs. Lucky. Originally in the second year I thought only 4 lakhs I'll receive. But luckily in the year 3 I got to know that I received 8 lakhs. Now tell me, out of this 8, will I tax once again entire 8 lakhs? Hey, how will you tax? This 8 lakhs is belonging to the same 10 lakhs. Out of which 6 lakhs already you showed loss. 4 lakhs you showed profit. Now you received only balance how much? 4 lakhs only income extra you received. So that 4 lakhs only is taxable in the year of recovery. So that is what this sentence you see once again. Subsequently, amount recovered in respect of such debt. If at all you receive any amount subsequently more than the amount due after allowance has been made, the excess shall be deemed to be profits and gains. This sentence meaning is whatever I told right now. Next. Oh my god. This point, little interpretation. Very simple. I sold goods for 10 lakhs year 1 on credit. Year 2, I got to know that out of 10 lakhs, I will not receive 7 lakhs. I got to know that I will not receive 7 lakhs. Assessing officer, income tax officer challenged me. Prove me that 7 lakhs is bad debt. I couldn't prove. What? I showed bad debt 7 lakhs, but department did not agree. What? Department did not agree. They agreed only 5 lakhs amount. They agreed only how much? 5 lakhs. Hey, dear SSE, you are saying 7 lakhs bad debt, but as per the records, as per the evidences, only 5 lakhs is bad, not 7 lakhs. Now tell me, actually my bad debt is 7, but department is considering how much? Only 5. When department considered only 5, year 1 they taxed on 10 lakhs, year 2 5 lakhs deduction they give. Net effectively 5 lakhs is taxed, no. Year 3, customer sent me a mail where he gave me final settlement of 3 lakhs only. Actual sale, how much I have to receive? Originally 10. What? How much I thought bad debt? 7 lakhs. But department considered how much? 5 lakhs. And effectively I paid tax on 5 lakhs. Year 3, customer paid only 3 lakhs ultimately. As a whole, year 1 and year 2. As a whole, year 1 and year 2, I paid 5 lakhs. On 5 lakhs income tax. But in reality, I received how much ultimately? 3 lakhs. Ultimately, how much I received? Year 3? 3 lakhs. Now tell me, how much is taxable in year 3? 0. However, you will get 2 lakhs more deduction. 2 lakhs more deduction. Year 1, you pay tax of 10 lakhs. Year 2, department gave you 5 lakhs benefit. Year 3, you actually received 3 lakhs only. Out of 10, you actually received 3 only ultimately. 7 lakhs is bad debt. Department gave deduction only for 5 lakhs. Remaining 2 lakhs also loss on, that remaining 2 lakhs claim deduction in the year in which you got ultimate settlement. So that's what this point is about. Please watch this video once again on the YouTube if at all you didn't understand. Getting it? Almost on a single point we spent 48 minutes. Till now it is 48th minute on a single point. So you see, if on the final settlement the amount recovered in respect of any debt where deduction has already been allowed falls short of the difference between debt due and the amount of debt allowed by the department, the deficiency can be claimed as deduction from the income of the year in which ultimate recovery out of the debt is made. Match this sentence with the example I told, you will understand. It is permissible for the AO, assessing officer, nothing but income tax officer, to allow deduction in respect of bad debt or any part thereof for the assessment year of a particular year and subsequently to allow balance of the amount, if any, where ultimate recovery is made. That is to say, when the final result of the recovery comes to know, ultimately we got to know in the year 3, Yes, they received 3 lakhs only out of 10 lakhs. 7 lakhs is the ultimate bad debt. Already department allowed how much bad debt? 5. So yet to be allowed how much? 2 lakhs. That's it. So with this bad debt provision, we understood. Not only bad debt provision, we also understood recovery. In order to claim bad debt deduction, 3 conditions. Business should be continued. It must be recognized as income at the time of sale in this year or earlier year, and it should be written off in the books of accounts. For some amounts, actual written off may not be possible. If it becomes irrecoverable, that's enough. That's why you see in my notes, in the notes at the beginning, condition 3, I gave 2 alternatives. You see, condition 3, I gave 2 alternatives. Either it becomes irrecoverable or it becomes actually written off. Any of these two. If it becomes irrecoverable, that's enough. Provided it is showed as income earlier, that's enough. So this bad debts provision is completely done. Clear? All of you? I hope you understood. If possible, put it as a comment on the YouTube video. Okay, if at all you understood this thoroughly. Or give me a message on Telegram at caramharsha, at RAMHARSHA. So give me a message on Telegram whether you understood this particular bad debts concept or not. At CA inter-level, nobody will deal this at this level of depth which I discussed. Getting it? But since it is there in the book, I covered. Otherwise, I would have not been covering. I will be discussing directly at CA final these points. Okay, so carry on. In the next video, I will cover section 37. With that, entire deductions will be completed.